Hi there, welcome to GrainTV. It's Friday, December 5th, and we had a positive close in the grain markets with soybeans leading the charge higher with a 25-cent advance. But following with strong gains were corn up 5 and wheat up 4. Cody, how about that soybean market today? What's the driver for this 25-cent advance?
Well, first of all, we had strong demand news. We had 240,000 metric tons of export sales reported early on this morning. That comes on the heels of yesterday's stronger than expected export sales report. So another strong demand story here, and I think that helped kind of pop soybeans early on. The other thing that I want to talk about is that head and shoulders pattern that so many people have been talking about. Really on Monday and Tuesday, it almost looked like we had a confirmed head and shoulders. People would suspect that is indicating a change in trend. Oftentimes people may initiate a short position. Now, of course, the last few days, that short position, if you initiated it when we went down through that neckline, you'd be wrong. And I think people were getting stopped out here today, contributing to this 25.5-cent gain here. Kevin, I guess my question is, we talk a lot about the cash market on Fridays. Do we see a supportive cash market here for this movement higher that we've seen in corn and soybeans?
Yeah, well, definitely. We've seen strength in the cash market, but it's been exceptionally strong in the corn market. We haven't seen the big advance in corn futures like we did in soybeans, especially today. Corn was pretty flat for most of the week, so corn basis actually was up a nickel across the U.S. on average, and especially strong anywhere that is export sensitive, like river terminals. You saw strengths of a dime in many cases, some cases a 15-cent move. So we had strength at the Gulf. We have lower barge rates continuing to help support basis levels, especially at those river terminals. Ethanol plants as a group were also up, but we did see a little bit of weakness in that Iowa region. Some of the Iowa plants were actually off a little. In beans, we did get strength, but not near as much as corn, up 3 on average for the week. Again, the river terminals were supported by lower barge rates. But here, the story is end users like soybean plants were not as aggressive. Especially in Iowa, we saw some dropping of basis. We seem to see lines starting to back up in terms of soybean dumping. So I don't think these guys are hurting for cash beans right now, and I think we're starting to see that in basis a little bit.
That sounds fair enough. Now, next Wednesday, we do have a WASDE report coming out, and here are the expectations. We have a Reuters poll of analyst estimates, about 20 analysts here. The average analyst guess here for ending stocks for wheat is 654 million bushels. We have a November WASDE report that actually forecasted 644 here. So looks as though possibly ending stocks increasing come down the pipe on Wednesday. Corn here looks like possibly some more corn in ending stocks in terms of analyst expectations, and soybeans coming here with possibly a revision lower here. Analysts expecting on average 427 million bushels here carry out compared to a November USDA WASDE report of 450 million bushels. So we'll talk more about this on Monday. I think this is going to be driving the trade on Monday, Tuesday, and then going into the report here on Wednesday. If you have any questions about what we talked about today, give us a call, 877-472-4607. And remember to take a demo of our trading platform. It's awfully nice to have live quotes on your mobile phone when you're on the go. If you're out and about this weekend, you'll realize that it's definitely an asset to be able to take that data with you when you're away from your desktop. So thanks a lot for tuning in. We'll see you here on Monday.